Hi, welcome back to our YouTube channel. My name is Ting Ting. Our topic for today is how to use stop limit orders. Do you find something familiar? And maybe previously you understand about stop orders, you understand about limit orders, but this is a combination of stop limit orders. So stop limit orders technically derive from stop orders. That's the reason why previously I mentioned to you that you just need to understand about limit orders, you need to understand about stop limit orders, but sooner or later you definitely will be able to understand about stop limit orders. Under certain circumstances in trading, you might need to put stop limit orders. Anyhow, these stop limit orders is a bit complicated. That is the reason why you need to understand stop orders by itself first. You understand limit orders by itself. When you combine both together, you will understand better. But today, this particular session, I'll use a very simple method to let you understand again what is these stop limit orders about. Now, before I start, as usual, if this is your first visit, this is your first videos, please remember to subscribe to our YouTube channels and on your notification bell. My name is Ting Ting. Let's start with our session for today. Now, as usual, we will start with a disclaimer. This topic is for education purposes only. There's no buy or sell call. Now, let's start with our stop limit orders. Do you notice that the order type, can you see that, is a bit different? Instead of selecting stop orders, instead of selecting limit orders, we are going to select a stop limit orders. But anyhow, stop limit orders is derived from your stop orders itself. But there's another additional information that you need to input, or there's another restriction that you need to apply. So later I'll explain to you. So you can see that this order type is a stop limit. And when you input your stop limit orders, you need to put in your trigger price and also your price. How do you put your trigger price and how do you put your price? Later, I'm going to explain to you. And what is the difference between when you're putting a trigger price and putting a price for your stop limit orders. Now, before that, let's understand the key definition of stop limit orders. So technically, as I mentioned to you, stop limit orders equivalents to stop orders, or I should say that is actually derived from stop orders. So the key definition we are going to pick up from stop orders, but the last point we are going to add in an additional restriction or additional information towards this definition itself. So coming back to stop orders, still remember previously the three key definition: triggered, central market, next best available price. Am I correct? So coming into these stop limit orders, still we are going to have a trigger price. Then because as I mentioned to you, because stop limit orders actually derive from stop orders, so we are still going to have this trigger price, then central market. But instead of next best available price, you're going to see that it is going to be next best available price within the range. So we actually set the range. That's the reason why we stop at certain price, but at the same time we limit to certain range only. So anything exceeding the range, we are not going to take. Instead, like stop orders, when you triggered, right, no matter what is the price being given, we will still take. For example, maybe the price is 20 points out the range, but we are still going to take it. But this stop limit is when we set our stop, when it triggered, they give me the next best available price. This next best available price, we still limit it within a range. So let's start with the example. Now, as usual, you understand buy low, sell high. This is the common concept of sell high, buy low. So when you're using a limit orders, as usual, we are going to buy low, sell high. But when you're using a stop orders, still remember, only stop orders, you're going to see that you're going to buy stop higher, sell stop lower. So when it comes to stop limit, the same thing, you're going to buy stop limit higher, sell stop limit lower. Why this is happening? I believe previously the videos in stop orders, right, you should be able to understand, but I'm going to re-explain to you via this particular example itself. Now, as usual, you need to draw an x-y-axis because I find that this is the easiest method for you to understand. This is why I discovered by myself and I created this particular example by myself as well. And this particular method, throughout my years of teaching, as I mentioned to you, I find that it's really very easy for people to understand. So when I created these particular methods, I find that many participants used to be able to absorb this particular method easily. So I'm going to use this method, and I hope that in the future, if you do not know how to place stop orders or stop limit orders, then you can use this particular example. Now, for example, we draw our y-axis, then subsequently you put a buy limit 1 FKL contract at the price of 1,529. So when the market move higher, then you are making a profit. So if you are making a profit, then you don't need to worry about it. Now, when the market starts to drop, then you are going to suffer a loss. So when you are going to suffer a loss, then we need to limit our loss. So if we are going to restrict our losses, we are going to protect our downside, we are going to protect our losses. So here's the place that you need to put a sell stop limit. Since this is buy, this is definitely a sell. So I put a stop limit, one contract at the price of 1520, then I put a comma 1515. I'm going to explain to you right now. Now, for example, if I bought at 1529, if the market start to move higher, I make it profit, it's okay. If the market start to drop, once reach 1520, still remember the three key definition? So once reach 1520, these stop limit orders will be triggered. It will be sent into the market. They'll give me the next best available price. So it might be 1,520, it might be 1519.5, it might be 1519. But at the same time, although that it will give me the next best available price, but this next best available price will be limited in between 1520 to 1515 only. So anything lower than 1515, this sell stop limit orders will not be executed. So unlike stop orders, once triggered at 1520, it definitely will be executed. No matter how worse or how bad is the subsequent price, they will still give me a next best available price. But this, I give it another restriction. I just want to take anything between 1520 to 1515 only. So anything worse than that, my sell stop limit will not be triggered. Now, I understand that this is the first time if you are exposing to stop limit orders, it might be difficult for you to digest, but don't worry, you can replay. Once you replay a few times and you go and check it out in your actual trading platform, trust me, you will be able to understand very well how do you use this. And stop limit orders under certain market condition is very good for you to use, especially if the market experiences sudden drop or sudden increase because of, let's say for example, an error trade, very big error trades, or else another thing is maybe those robot triggered their orders wrongly. There's some malfunction itself, those algo traders, etc. So it might cause a sudden movement in the market. So when you are using these stop limit orders compared to stop orders, it might be better. But anyhow, for this particular stop limit orders, slowly, when you get yourself started in the trading environment, you will understand. Trust me, you definitely will understand when you are going to use these stop limit orders. Even if you cannot understand how to use stop limit orders, by using limit orders and stop orders, you are good to go. No worries, this is an additional information, additional knowledge for you to understand, and subsequently try to discover by yourself exactly when you are going to use these stop limit orders. Now, in terms of short position, so again, we are going to look at the stop limit. So if I'm going to sell one contract of FKLI at the price of 1,750, if the market start to drop, I'm having a profit. If I'm having profit, there's no problems. Now, if the market start to move higher, I'm having a loss. If I'm having a loss, then here's the place that I need to put a stop orders or stop limit orders. So since this is a sell order, so this is definitely a buy. So we are going to have a buy stop limit, for example. Since this particular topic is a stop limit order, then you're going to see that I'm going to sell at 1,750. If the market start to drop, I'm making profit. It's okay. If the market start to move higher, once reach 1,760, my stop orders will be triggered. It will be sent into the market. It will give me the next best available price. So the next best available price might be 1,760 or 1,760.5, 1,761, etc. But the next best available price will be limited into this range. So for example, between 1,760 to 1,765 within this 5 point of range. So anything higher than 1,765, which is worse for this scenario, then these particular stop limit orders would not be executed until it came back to 1,765 to 1,760, then it would be executed. So as I mentioned to you, it might be very difficult for you to digest for the first time, but using this XY axis will help you understand very well the range. So if you really put another part, it will be here. If supposingly I should put limit at 1,765, then it's easier for you to understand. Clear? So you can replay a few times, then I believe you'll be able to understand. This is the actual trading platform. You can see that you bought one contract at 1,597, for example, with a limit orders. Then subsequently, you sell stop limit. Can you see that? You put your trigger price at 1,585. You limit it to 1,580. So meaning what? Listen carefully. So I bought one contract at 1,597. If the market start to move higher, it's okay. Now, if the market start to drop, once reach 1,585, which I'm going to cut loss 12 points, can you see that? So your stop orders will be triggered at 1,585, and they'll give you my next best available price. It can be 1,584.5, 1,583, etc. But it cannot be lower than 1,580. If the next best available price below 1,580, then this particular stop orders would not be traded. Clear? So I believe this is easy for you to understand. Your stop limit orders, can you see that? Then if not, you just need to replay. Now, before I end for this particular session, please remember to subscribe to our YouTube channel and on your notification bell. Don't forget to give us a thumbs up. I'm going to see you in our next video. I'm Ting Ting. Bye-bye.